It's Friday, April 9th, 2020. Welcome back to another edition of Coronavirus and Commercial Real Estate. We're entitling this one, Big Deals Come and Big Deals Go. I'm your host, Jorge Morales of Blue Box Real Estate. We're a commercial real estate firm in South Florida. We specialize in representing tenants and landlords, office tenants and office landlords in South Florida. Find us at blueboxre.com. Well, it is Good Friday, and I wish everyone here a happy Easter weekend. And because of the Easter weekend, we've decided at Blue Box that we're all going to work from home this week and this weekend and probably into the near foreseeable future. But welcome. We've got a jam-packed list of articles relating to coronavirus and commercial real estate, and we want to jump in. And why are we doing this? We believe that a well-informed tenant or landlord will make the best decisions and will be a better tenant and landlord. And listen, while you are focusing on growing your business and doing what you need to do to keep your business up and running throughout these uncharted times and waters, we're here to be your commercial real estate voice and provide you this news source so that you can focus on your business and just tune in once or twice a week and get up to date with what's happening with commercial real estate. The first article we're going to jump right into is related to the stimulus package, which, let's face it, our political leaders swiftly passed, but now implementing it, not so much. And that is the first article we're bringing to you. This comes from the Miami Herald, and it's entitled, "Emergency Loans Were Supposed to Prop Up Miami Small Businesses. They're still in limbo." And again, quoting from the article from the Herald, "Still waiting for a loan under the government's $350 billion emergency paycheck protection program?" That's the question. That's the lead-in. Let's continue. Under the PPP, okay, and again, PPP, Paycheck Protection Program. And let me pause there. Another selfish plug here for don'tsignthelease.com/show, episode 32, the podcast, the Don't Sign the Lease podcast. We interviewed Stuart Rosenfeld of HR Risk Advisors. He's the principal, and we discussed employment and coronavirus, and we discussed this Paycheck Protection Program, workman's comps, and all things related to employment and coronavirus. So I encourage you to go take a look. These are free resources available for you right now to listen to and help your business. Under the PPP, banks are supposed to act as the conduit for federally backed loans to small businesses fighting to stay afloat during the coronavirus shock. But the program has faced a difficult rollout as many banks seek clarification of how the loans count against their own loan to capital ratios. Imagine that. They also want to know whether they face potential regulatory and penalties if a borrower is later found to have engaged in money laundering or fraud. So again, in theory, thank you for those who are going to need it. The payment protection plan is there, but banks are now having to sift through all the nitty-gritty and details of putting this together. Wednesday afternoon, continuing the article, U.S. Senator Marco Rubio, the architect of the PPP program, thank you, Marco Rubio, tweeted that the Treasury appeared to have published that final guidance, but it was not immediately clear whether it was sufficient for some of the banks. Chief Operating Officer Christopher, I'm going to butcher your last name, Meccarello of Innovative Financing Solutions said this: "If banks are closing these loans, there's lots of liability because material sections of guidelines and regulations have yet to be published." So don't worry, we'll publish that later. Just loan. And we'll deal with the details later. Well, that could be problematic for banks, and some banks are pausing and considering this. Continuing with the article, we have 3,500 lenders. Now I'm quoting the Treasury Secretary, Steve Mnuchin. He said this in CNBC this week. He says, "We have 3,500 lenders up on the system with many more getting signed up every day. And I want to assure all small businesses out there, we will not run out of money." Of course not. They're never going to run out of money because the Federal Reserve can print money left and right. Now, the fact that they're devaluing our dollar and our monies and destroying our savings, that's another story. But we will not run out of money. because they have the ability to print the money. Munchin said he hoped Congress would soon expand the PPP effort, and I'm starting to see articles about it. The next $2.3 trillion stimulus coming right down the pipe. Continuing to quote the Treasury Secretary, "We want to assure everybody, if you don't get a loan this week, you'll get a loan next week or the following week. The money will be there." Let me read that again. Sorry. It's nice to laugh in our times, isn't it? It's nice to take a laugh. How assuring is this quote from the Treasury Secretary? "I want to assure everybody, if you don't get a loan this week, well, you're going to get a loan next week or the following week." So it's coming, don't worry. It'll be there. The Federal Reserve also took a step Wednesday to boost lending somewhat, narrowly releasing banking giant Wells Fargo from restrictions imposed on it because of a weak oversight from its board of directors in the past that led to abusive customer practices. Now, we covered this in the last podcast, video cast, which was early this week, April 7th. And Wells Fargo said, "Oh, sorry, we have a $10 billion cap on these SBA loans. We're tapped out. We really can't participate any longer in this PPP program." Well, the U.S. Treasuries, the Federal Reserve came back and said, "Not so fast, Wells Fargo. We'll unloose those bonds and those caps. So go ahead and join the rest of the banks in loaning money to the small business community." So it's yet to be seen what's going to happen there. But I think that's a checkmate and a double checkmate move here. Pretty comical. A common theme emerging from the borrowers and banking officials is that priority is being given to existing customers. Speaking on CNBC Wednesday afternoon, the CEO of Ocean First Financial, a bank active in New York and New Jersey, said as much. "If you don't have a business checking account, it makes it a little harder," said Chris Mayer, saying businesses are not being turned away, but it just may take longer. I guess you have to question, if you're a business and needing some help from the government stimulus, but you don't have a business checking account, what kind of business were you running? That's somebody, please leave a comment. I'm scratching my head. If you're in business and you don't have a business checking account, I would think that would be difficult. And perhaps that's one layer of fraud protection on these monies is to, if you don't have a business account, maybe you shouldn't be applying for this. So that is the first article from the Miami Herald, and these all relate into each other because funding is not trickling down. I said it's now April 10th. Sorry, I said April 9th. I'm recording this April 9th. April 10th, happy Good Friday, everyone. The next article comes to us from the South Florida Business Journal. A lot of startups will fail, while raising venture capital in South Florida could get even tougher. So again, these folks could potentially go to some SBA programs if the money's not coming fast enough. And a lot of startups turn to the venture capital arena to get funded and to grow. When I started Blue Box Real Estate, it's already been 3 years, praise God. In 2017, one of my clients offered, "Do you need capital to grow?" I said, "We're good right now." And praise God, as of this point, we've never had to go into debt, and Blue Box Real Estate is strong. But that question was asked. Well, many do turn to venture capital to grow. Source quoting here from the article, thank you, Iman Reiser. It's estimated that a worldwide slowdown caused by the virus, formerly known as COVID-19, could evaporate $28 billion in startup investments in 2020, according to recent findings from Startup Genome. The grim prediction comes after South Florida startups and technology companies attracted a record amount of venture capital dollars in 2019. Now, what we don't know is if that $28 billion of evaporation is just South Florida startups or is that national? I don't know. I can't imagine that's just South Florida, but perhaps. COVID-19 has had many South Florida venture capitals less focused on funding new companies. Continuing. Here's a couple of examples. Miami-based Krillion Ventures managing partner Melissa Krinsman has put a freeze on new investments. Her decision is based on her experience during the 2008 market downturn when she lived in New York City and led Venture Architects as an advisory firm for technology startups. There are too many unknowns at this time, she said in an email. Once the dust settles, and we have a better idea of what post-coronavirus round one of funding looks like, we will consider new investment opportunities, Crispin said of her seed stage firm. And I think that's a good summary of where we are as a business completely, not just South Florida, but nationally. I think the business community is on pause. Really, the last time I saw something like this was after 9/11 in 2001. Happened Monday morning. It seemed like the rest of September and through the rest of the year, the business community just froze. Everyone was concerned. Everyone was afraid to do deals, afraid to take that expansion, afraid to do that long-term extension. We entered into a new world, a world of terror and a fight against terror. And it feels a lot like that in that we're now in a new world of pandemics. And we're going to see a host of new insurance programs come out because unfortunately most business interruptions insurance aren't going to cover the coronavirus or the government shutdown. So we're in a new world that we weren't in 30 days ago or 40 days ago, one where viruses can run rampant and one where governments and local officials can go rampant and shut your business down. So who knew that was possible? So I think going forward, we need to see what is the post-coronavirus world look like, what's the new normal before venture capital, before the business community gets back into flow. We need data. And until we have that and until we see what's going on, many businesses are simply taking a sideline approach and watching. Continuing with the article, economic outcomes of the coronavirus pandemic can't be predicted. But what these investors are sure of is that startups can make it through the next months or years of uncertainty, will be stronger companies than they were before, So in a nutshell, the companies that make it through this cycle are going to be stronger. Think about it. If the venture capital money doesn't flow, but yet you got your company up and running and you're still running in the post-coronavirus world, then I think you're going to be in such great position to then attract the venture capital that you need. They'll be lining up to come your way. More than half of the Fortune 500 companies, continuing with the article, were created during a recession or bear market. Interesting. According to the Startup Genome Study, and over 50 technology unicorns or startups valued at $1 billion or more were founded during the Great Recession between 2007 and 2009. 2007, 2009. Excellent. So more than half of the Fortune 500 companies came to be during the Great Recession. And so who are going to be those next companies who start now going forward from March of 2020 going forward? And those that start and make it and thrive are going to be pretty successful, probably leading the business charge going forward. The next article comes to us from Business Insider and continuing with this theme in some respects, but we switch to the restaurant area of the world. And this article is a little glim. Restaurant Apocalypse, it's entitled. More than 110,000 restaurants expect to close up forever in the coming weeks, with millions out of work in the industry's future uncertain. And so this is a real deal. This is a real story. I've been talking to some brokers in the market about this. I think your Cheesecake Factories and your Outbacks, the chains are going to survive because they're well capitalized. Some of them are traded on Wall Street. They have the weight and leverage against their landlords to negotiate and so forth. What about these smaller one-off someone mentions here in the article, I'm not going to read it, all of it, but you can find your chain stores when the market turns, but what you're really going to miss is that local baker, that local bakery, or the best little coffee shop that's not named, who. That's who is really suffering right now. Continue with the article. The restaurant industry lost an estimated $25 billion in sales and more than 3 million jobs in the first 22 days of March. 22 days of March. We're now 2 weeks from that. As the coronavirus outbreak swept the U.S., roughly 30,000 restaurants have already closed for good across the country, with more than 110,000 expected to shutter in the next month, according to estimates by the National Restaurant Association. I mean, think about that. If you're a restaurant operator and you've been shut down for May, you're going to be shut down all of April. The World Health Organization, which I wouldn't put much stock into myself, but our leaders and Fauci are saying that when we do open, whether that's April 30th as the president wants, and I do believe he's doing everything he can, he has a business mind, he wants to get businesses up and running, and we applaud him in that. When we get this economy back up and running, most likely will be without restaurants, sit-down restaurants. They're most likely going to keep the 10 or more from meeting, social gatherings, unfortunately, and it'll be a long time before restaurants can operate like normal and serve people. So if you're a restaurant operator and you put your life savings into that business and you're owing rent, $10,000, $15,000, $20,000, whatever it is per month, or more if you're in some hot spots, and you've got all your employees and you've got your chefs and your sous chefs and your manager, and restaurant business, a chef and the manager are fundamental to the success of the restaurant, and now you've had to furlough them or lay them off. What are the opportunities that you're going to be able to rehire everybody back, especially your cooks, your chefs? And when are you going to be able to do that? And if this goes on until May, until June, July, there's really no end in sight. So you can understand why 30,000 restaurant operators have said, hey, I don't see an end zone. I can't continue to carry the debt and come out of pocket every month. We're just shuttering down. And that's the story that's going to dominate the rest of 2020, in my opinion, until we get back to a normal state. I'm not sure when that's going to be, but there'll be many of our beautiful, wonderful, eclectic restaurants in South Florida. We're known for this. We've got restaurants from all over the world: Peruvian, Ecuadorian, Brazilian, Cuban, Japanese, Korean, all Indian. It's a wonderful place if you're into food, South Florida, but the best food comes from the locals, from those one-off restaurants. And unfortunately, I feel they're going to be a casualty of this coronavirus. I hope I'm wrong. Continuing with the article from Business Insider, 11% of the more than 4,000 restaurant owners and operators surveyed by the National Restaurant Association last week said that they anticipate they will permanently close within the next 30 days. 3% said they already permanently closed their doors. So 3%, that's 14% of restaurants going to permanently close by the next 30 days of 4,000 restaurant owners. Again, it's impossible to ask them to continue carrying their restaurant when they don't know when they'll be able to reopen. If these figures are applied to the more than 1 million restaurants that the NRA estimates exist in America, that would mean 30,000 restaurants already gone, roughly 110,000 more expected to go the same way within the month, based on these calculations. And that may be underselling it if this continues. If we return the economy back in May or June, more likely June, but without restaurants, that's going to be difficult. And listen, restaurants are a place where, what a blessing in America that we have restaurants. You get your family. It's a celebratory place to go to enjoy family time. It's also a place in the business communities where a lot of business is done, where you can connect with your clients and prospects. And so we need the restaurant industry, and we need them up and running. So pray that our leaders are looking towards that and seeing that we're never going to be back to normal until everyone is back. The next few articles really led to the title of our show today, which is Big Deals Come and Big Deals Go. But I'm going to start with the big deals going. And it's hard to find a bigger deal that got corona'd than this one. And this comes to us from CoStar News. Mark Hirschmeyer. Thank you, Mark. Coronavirus stalls Hines Global REIT's $4.3 billion property sales plan. Houston developers affiliates face IRS deadline to sell 8 U.S., UK, Poland, and Russian properties. So Hines Global REIT, and Hines has been a major player in the South Florida market. Thank you, Hines. They've built quality projects and managed them wonderfully. Hines Global REIT set to complete a $4.3 billion worldwide property liquidation plan by July. Now sees that time frame in doubt as the coronavirus pandemic disrupts investment markets. And it's interesting, let me pause there, because in our own market, South Florida, there were some key assets that were on the market. One of my own clients had their property on the market, and everything is slowing down because of coronavirus. We had some major office towers hit the market just before coronavirus, and I'm sure those are most likely been pooled. And so we're seeing some major transactions get installed. Our capital markets guys are really going to be on pause a little bit. Hines' global footprint gives it a unique perspective on how different markets across the globe have reacted to the impact of COVID-19. Quoting from Hines, the assets owned by the Hines Global REIT were in the market at the time the COVID-19 situation took hold, and that process has since been disrupted, Hines said in an email to CoStar. We have seen similar disruptions globally and are continuing to evaluate the real estate markets. We're going to continue with the story after I take a break and I want to thank FIU School of Real Estate. While we have been actively marketing the 8 remaining assets for disposition, we anticipate that the sales of those assets will be delayed, Hines said. Under IRS guidelines, Hines Global has until July 17 to complete its liquidation. If it cannot meet that deadline, then the REIT plans to transfer any remaining assets and liabilities to a new liquidating trust. So $4.3 billion. And there's a list of these properties from San Antonio, Tennessee, Minneapolis, Jacksonville, Florida, Massachusetts. Then we've got London, Poland, and Moscow. Again, if you haven't yet, subscribe to this this video, and please hit that bell so you know when we release these things. You'll get it. You're going to get it a couple hours, if not an evening before, because I'm most likely posting these the evenings before, since I'm doing these the day before. But I'm also covering all these news articles on our LinkedIn corporate page. So if you haven't followed us yet, go to LinkedIn, pause the tape, go to LinkedIn and look up Blue Box Real Estate. Follow us there. It's one easy way to keep up with what Blue Box's Real Estate is doing in South Florida. And all these articles have been released already through there. The next is another large deal. Now this one's a little bit closer to home. In fact, you could go back through our news cycle on our website, blueboxre.com, where we keep an archive. And we covered this. This was a huge win for Miami Overtown. Swerdlow was going to develop Overtown and bring a Target and other projects to that area. Well, now this comes to us from South Florida Business Journal as well. Swerdlow delays Miami project amid lawsuit. National developer R. Donahue Don Peebles filed a lawsuit that asked for $160 million in damage from the Miami developer Michael Swerdlow over a mixed-use project in Miami's Overtown. Now, I don't want to get into the he said, she said of this lawsuit, but Swerdlow is denying, obviously, any allegations. Peoples is claiming that Swerdlow conspired with the city officials to take the project away from them. Okay, anyhow, let's get on with the article. Meanwhile, Swerdlow indefinitely delayed closing on the land deal for the project with the city's Southeast Overtown Park West Community Redevelopment Agency. The closing of the transaction with the CRA was contingent on obtaining financing, so that's highly unlikely that that deal is going to go through anytime. Who wants to start building a retail center in the midst of coronavirus? So another large deal goes. So we talked about 2 large deals going. Let's talk about the largest deal that I found take place and across the country, and this has to do with Google. And again, some of these tech companies, Google, Facebook is having like a rebirth. Facebook Live, everyone's using it again. Zoom is overwhelmed. So our tech companies are shining right now as everyone's home on their tech gadgets. But Google, this is from CoStar News, expands Silicon Valley footprint with the latest $41.2 million deal. Okay, they bought their 4th office property in San Jose, California. This is from Katie Burke. Thank you, Katie, at CoStar News. Google has added another piece of Silicon Valley real estate to its expansive portfolio with the latest purchase of an office in San Jose, California, where it is planning a sprawling campus and neighborhood around Transit Station. The Mountain View, California-based tech giant recently closed on the 901,000 square foot building at 225 West Houseman Street for $41.2 million, the 4th in a string of recent acquisitions it has made throughout the South Bay City. The registry was the first to report the transaction. And finishing this article with the 4th acquisition now complete, Google's reach along the Tasman Drive spans about 553,000 square feet, providing room for as many as 2,800 employees. So congratulations, Google and the brokers involved. It's not cited here in the article, but congratulations for continuing to get deals done in the COVID-19 economy. At least you're showing us deals can happen. And listen, this has been the week where I'm hearing from folks. There's a lot of money on the sideline. I'm hearing from folks, hey, take a look. If commercial real estate values come back to reasonableness, then we want to be a player. So South Florida, hang in there. I've got one more article on co-working, but let me say South Florida, hang in there. We have a lot of fundamental reasons why we're going to rebound and rebound well. Besides the beautiful weather and sunshine, we've got tax havens and wonderful employment base. We're the gateway to South America. There's a host of reasons that South Florida is going to do well. We got to weather this storm, no doubt, especially with our cruise line industries and restaurant industries and leisure industries hurting. But there's a lot of fundamental reasons why South Florida is going to continue to be a place where investment pours into from Russia, from China, from the Northeast, from South America and the Caribbean. So hang tight. In fact, we might see a drove of investments look to Miami because we're still, compared to New York or Boston or Houston, highly undervalued. And so we covered it recently in one of these articles where a building sold for $500 a foot compared to $1,000 a foot in Oakland. So Miami and South Florida as a whole still highly undervalued. And I think when things turn and business opens up, we might see even more interest, especially from the Northeast, more folks looking to get out and come bring their businesses and homesteads to South Florida. Lastly, and I'm trying to really pick up the pace on these, so I apologize, trying to pick up the pace here. Last story deals with co-working, and we covered a lot. Co-working's been in the news. Actually, COVID-19 kind of derailed all the negative WeWork, but they're back in the news because this is from CoStar. Co-working segment's about to face its biggest test, and a lot of us have been saying that WeWork expanded in the middle of a bull run. You look at Regus. Regus had came out of bankruptcy 20 years ago. I remember when Regus was growing in our South Florida market in the early 90s and mid 90s, nobody wanted to talk to them. We had a development late 90s, early 2000s, and we decided not to move forward with Regus. They were coming out of bankruptcy. It was an executive suites. It was almost like raising the white flag. I can't lease space, so might as well lease it to the co-working industry, the executive suite industry then. But obviously that rebounded, and now Regus is a great credit tenant. They're an amenity to a building, and almost every major high-rise building in South Florida has a co-working center. But WeWork grew within this massive upswing. So one, they're untested, but two, they've got massive leasehold obligations at the top of the market. In every market they're in, Manhattan, Miami, wherever they are, they sign 20-year leases at the top of the market. And so they're about to face their biggest test. A lot of us thought, will that plan work in a recession when enterprise tenants can now go back if there's a correction of rents, can save a lot more money leaving a WeWork, and WeWork is yet strapped with that lease that was signed at the top of the market with rents continuing to escalate over 20 years. So that's what we're going to find out thanks to COVID-19. Continuing with the article from Michelle Rossell. Thank you, Michelle. I probably butchered that. I actually think it's Michael Rossell. While the U.S. office market has been holding up better than other property types through the initial response to the coronavirus outbreak, a prolonged economic recession will certainly affect all market segments, including a greater number of office occupiers. I would agree that compared to industrial, which had supply chain breakdowns starting late last year with China, I think that will be more temporary. Retail, obviously, we read an article about the retail apocalypse. Office is probably holding its weight, but don't kid yourself. April, this was the first month, it's now April 10th. We're going to know by the end of April and going into May that office is also being impacted, probably to the tune of 10, 15, 20%, I would say, of tenants are reaching out to their landlords, asking for some type of economic help in paying rent. Continuing with the article, however, with their short-term leases and business model built around collaborating office workers, co-working office providers have already been feeling the pain. Many have laid off workers, curtailed expansion plans, and sought to restructure leases as the industry struggles to make it through the era of social distancing during coronavirus pandemic. And that's really key to the long-term play here. WeWork, which claims it's financially equipped to withstand the crisis caused by the coronavirus. Yeah, because they're now countersuing SoftBank, who pulled their $3 billion. We'll see how that works out. Has also reportedly asked for 30% discounts from landlords on its lease agreements while offering discounts to its subscribers only if they sign long-term agreements. Okay, how about that? Well, I read somewhere recently that WeWork has hired JLL and Newmark nationally to go in to negotiate these discounts And while I'm sure every broker at JLL and Newmark were raising their hand and fighting to get to that top of the food chain when WeWork was expanding to represent them and get paid on these 20-year leases when they were taking 60, 80, 150,000 square feet in some cases, I'm sure all the hands are down and everyone's kind of looking around them and just kind of ignoring themselves when they said, who wants to represent WeWork now, and try to negotiate these 30% reduction of rents. So probably not so many people wanting to work that account. WeWork rival Knotel recently announced it will cut or furlough half of its staff, roughly 200 employees. Additionally, the firm has halted acquiring new real estate and signing new leases. Another co-working firm, Covine, has laid off 150 employees, or about 20% of its staff, while the firm closed all of its locations nationwide. I thought that was a typo. Covine has closed all of their locations nationwide. Now, if there's a silver lining, the article points out, it's that for the office market at large, it is that co-working firms occupy less than 2% of all space in the market. And that is true. That is true. But we also, there's a trickle-down effect, and it's really a market to market. There's a new development. There's, South Florida, let me speak to Miami. We really don't have a lot of new construction. We have a few key projects, but the biggest one, and really they've barely scratched the surface. They're doing pylon work. I would expect that deal to get pulled or furloughed for a couple of years, but it's a project on Brickell, and they signed WeWork as an anchor tenant, okay, for about 40 to 50, 160,000 square feet. Is that deal going to happen? Now tell me that that's a silver lining of that project. When they were building 500,000 square feet and a third of that was going to go to WeWork, and that's the deal that they used to get debt and break ground. So it's going to be, I think it's going to be market to market and building to building, particularly WeWork. I really think others like Regis and some of the Regis and Spaces and some of the regional ones, Quest and Pipeline, are going to do fairly well. I think they'll do well during this time. And as I mentioned before, I would double down on good co-working, because I think the business model is going to change. I think you're going to look at more corporations to realize, hey, sending folks to work from home wasn't such a bad thing. Maybe I don't need that big full floor office lease. Maybe I can park myself in a co-working and have half the staff at home and half the staff come and go. So I think the model will change. I think the model will change in terms of layout, which the article kind of continues. Can co-working concepts adapt to prevention measures? This assumes that there is, quoting from the article, that there is not a lot. This assumes that there is not a lasting wholesale change in social norms regarding social distancing. The concept of shared hot desks and close collaborators run counter to the prevention measures we've all quickly adapted over the last month. And the longer this goes, it's going to be less than adaptive. It's going to be a change in our way of life. You do something for 30 days in a row, it becomes part of you. The co-working concept can adapt to be a little less with more separation and greater number of offices rather than a completely open floor plan. And I would say that the co-working centers in South Florida that have been very successful are probably a little less and more private offices. Even if there's more glass and even if it feels more open, at the end of the day, you're still renting an office. And I think that's going to continue. As shared office pioneer Regis has proven, small firms and startups, which may not have the capital, prefer to maintain flexibility rather than enter into a long-term traditional lease agreement, have continued to favor co-working arrangements even through economic downturns. The test this time is that WeWork and the numerous smaller local co-working players are untested during a pandemic, let alone a recession. Thank you, Michael Russell. And we'll have more to say about that. I'm looking to do a podcast on subleasing. I'm looking to do a podcast, again, through don'tsignthelease.com on the changes that will be coming to commercial real estate, not just to co-working, but others. Thanks to what COVID-19 and this pandemic has kind of revealed. We've kind of been taking things for granted, doing things a certain way for a long time. And I do believe major changes are coming. So again, that's the last article we're going to cover today. I hope you value these little podcasts or video casts, because we're putting in the time. It does take time, believe it or not, to put this together and to edit it and prepare it. But we want to track the commercial real estate segment for you. And not just that, we would love to be your real estate voice. If you have any need of having your lease reviewed or having conversations with your landlord or just want someone to talk to, remember, we are not attorneys. So what that means twofold to your benefit is we're not going to charge you to review your lease or do a lease abstract. We're not going to charge you to look at options on your lease. And second, beyond just, and listen, you may need a real estate attorney. We might recommend that. Hey, listen, you really need to get an interpretation of this. And let's get someone good, and we have plenty of folks we can recommend. But right now, if you just need someone to speak to about your lease and your commercial real estate needs and what can I do, we're here, Blue Box Real Estate. Send us a note, info@blueboxrv.com. And the second, I said twofold, second-fold advantage is that we can come in alongside you and develop a real estate strategy of how to get through this and how to thrive beyond this. So again, consider us if you're in South Florida or anywhere in Florida. We can help you out with your lease, and we're happy to do it. Our agents, our team at Blue Box, we have over 60 plus years combined experience representing office tenants and landlords, so we're happy to do that. Well, let's end. It is Good Friday, and we have the Easter weekend coming on Sunday, which for Christians is known as Resurrection Sunday. And I want to read a chapter, or most of a chapter, from the book of Isaiah. And it's Isaiah 53. You might be saying, wait a minute, Jesus in the Old Testament, or this is Isaiah 53? What does that have to do with Easter? Well, Isaiah wrote this hundreds of years before Jesus was born. And if you read the first book of Matthew, it says the book of the genealogy of Jesus Christ, son of David, son of Abraham. So before this son of David, son of Abraham was born, we read Isaiah 53, written again, but well before Christ was born and well before the cross of the resurrection. And this is what we read. Who has believed what he has heard from us? And to whom has the arm of the Lord been revealed? For he grew up. Now it's talking about, if we backed up, it's talking about in Isaiah 52, verse 13, behold my servant. Okay, so God's talking about his chosen servant, his Messiah, his Christos, his Christ, which is the same in Greek is Messiah, or Messiah coming from Hebrew. So this talking about his servant, his chosen one. For he grew up before him like a young plant, and like a root out of dry ground. He had no form or majesty that we should look at him, and no beauty that we should desire him. He was despised and rejected by men, a man of sorrows and acquainted with grief. As one from whom men hid their faces, he was despised, and we esteemed him not. Surely he has borne our griefs and carried our sorrows. Yet we esteemed him stricken, smitten by God, and afflicted. But he was wounded for our transgressions. He was crushed for our iniquities. Upon him was a chastisement that brought us peace, and by his stripes we are healed. And I want you to hear the echoes of the cross, of what Christ went through on the cross. He was wounded, he was crushed. His stripes, by these things is where healing comes from. All we like sheep have gone astray. We have turned every one to his own way, and the Lord has laid on him the iniquity of us all. He was oppressed and he was afflicted, and yet he opened not his mouth. And like a lamb that is led to the slaughter, like a sheep that before its shearer is silent, so he opened not his mouth. By oppression and judgment he was taken away. And for his generation, who considered that he was cut off from the land of the living, stricken for the transgression of my people. And they made his grave with the wicked and with the rich man, and his death. Christ was crucified with two thieves on either side, and he was buried in a rich man's tomb. Although he had done no violence, and there was no deceit in his mouth. There was no charge brought up against Jesus that stuck. He had done no wrong. He was blameless. And so he suffered this violence not because of his own sin, but because of the sin of those that he would save. Yet it was the will of the Lord to crush him. He has put him to grief. Now, interesting when you consider, we could read the New Testament and we can see that the Pharisees and the Sanhedrin condemned Jesus for blasphemy, claiming to be God, and they took him to Pilate, and then it was actually Pontius Pilate who eventually condemned him to death on the cross. and it was Roman soldiers who put nails in his hands. And yet Isaiah, hundreds of years, says the same thing that Peter says in the book of Acts, preaching backwards, looking back at the cross, that it was the will of God, Jehovah, the Lord, to crush him and to put him to grief. Because that was the only way that a holy God could deal with sin, was by having someone come in and substitute in the place of sinners, who was both God and man. So he can suffer on man's behalf, but he could absorb the wrath of God and pay the eternal punishment that we owe because of our sin. It took a God-man, Jesus, and it was the will of God to crush him. This is what they determined to do before all of eternity, how they would save sinful man. When his soul makes an offering for guilt, he shall see his offspring and prolong his days. The will of the Lord shall prosper in his hands. Out of the anguish of his soul, now we're talking resurrection, out of the anguish of his soul he shall see and be satisfied. By his knowledge shall the righteous one, my servant, make many to be accounted righteous, and he shall bear their iniquities. Amen. Well, let me read the last verse since we're here. Therefore, I will divide him a portion of the many, and he shall divide the spoil with the strong, because he poured out his soul to death and was numbered with the transgressors. Yet he bore the sins of many and makes intercession for their transgressors. So the beauty of the cross and the resurrection right there found in Isaiah 53. And there's so many passages throughout the Old Testament. I'm just reading through Ezekiel, just finished reading through Jeremiah, where the prophets speak about the new covenant that God is doing, the new covenant that he was going to make through Christ. And so again, I implore you, this is a wonderful time to grab your Bible, dust it off if you haven't in a long time, download a Bible on your phone, on your app, and pour into God during these times. And you know, those who seek him, the Bible says that we must come to him by faith, for God's a rewarder of those who diligently seek him. So seek him while he may be found. And I thank you once again for tuning in. I hope that you and your families are healthy and safe, that you enjoy this wonderful Easter weekend. I'm doing this early so that I can try to take some time off on Good Friday and through the weekend and enjoy what matters the most, God and my family. And look forward to speaking with you again next week, God willing. And for Coronavirus and Commercial Real Estate, I'm Jorge Morales. Thank you for tuning in. Good day.